I just want to get your pulse on the global economy right now and whether we are, in fact, poised to see lending tighten much, much more aggressively.
Well, Morgan, first of all, it's good to be with you again. You went right to the heart of the matter. What's the outlook for the global economy? I think if you view this post-COVID recovery as an era that has been elevating into the atmosphere, I think it's losing its energy now. It hasn't yet started to turn down, but I think it's clearly facing stronger headwinds now. I think that the added deceleration effects of the Silicon Valley bank crisis has really added to the weight of the higher interest rates, the higher inflation that consumers and businesses are facing. And so it looks increasingly likely to me, Morgan, that we will be moving into a mild recession as we head into the second half of this year.
You're somebody who basically took the global banking system through the great financial crisis, through the Greek debt crisis, a number of situations over the last couple of decades. I just wonder if you think this banking crisis is over, given the fact that we've heard from the likes of Jamie Dimon in recent weeks who worry that maybe it's not.
Well, I would feel much better if First Republic had been resolved. I don't want to point fingers at an individual bank, but this situation has not been resolved. And I think it continues to create a little bit of a cloud over middle and mid-sized regional banks. I think that it is important to stress, though, that in my view, the overall heart of the banking system is sound. I think we've clearly seen a few CEOs, a few risk managers, and a few supervisors who haven't done their job. But I don't think we necessarily should broaden that to paint a darker picture over the banking system as a whole. I'm in Europe right now, and I've spent time with bankers here. And, you know, the European banking system hasn't been as robust the last few years as the American banking system. But it also looks quite solid to me. I think that capital levels are high. Deposits obviously have been the shaky dimension of this, particularly not in the super regionals and not in the large banks, but particularly in the small to mid-size banks, the regionals, the smaller to mid-size regionals. But I think that they're addressing this through higher rates on deposits. I think we clearly are in a phase where the credit flows are going to be constrained, and this has added, in my view, a significant factor to the potential slowdown.
I know when we had you a couple of weeks ago, you did say that you were increasingly concerned about that. But then we look at the Beige book today, and I didn't see red flags, really. Some yellow ones, maybe. Activity was little changed, slightly up, slightly down, labor market loosening, but not dramatically. Doesn't that make you a little less, perhaps, concerned than a couple of weeks ago?
Not really. Well, it depends on what the concern focuses on. Okay. If we're focusing on the concern about the core stability of the banking system, I am much less concerned. If we're focusing on the prospects of constrained credit added to the decelerating forces in the global economy, then I'm more concerned. I've only taken a quick read of the Beige book. I must admit, it's only been out a few hours, and I just had to come in from a business dinner. But my reading of it is that it shows in many of the districts, many of the Federal Reserve's district, a slowdown, a fairly sharp slowdown in some in credit growth. And I think that is a clear signal of the deceleration in the economy. And when you add that to the troubles facing commercial real estate, when you add it to the challenges that are faced, particularly by consumers at the middle and low income levels who have been fighting this inflationary scourge now for quite some time, I think that the odds of that era turning downward, moving into a mild recession, have grown. And I think that with a lag, that's likely going to be the evolution in Europe. I am mildly encouraged by the slight improvements in inflation. And I would hope that as we look out 2 weeks to the Fed's next meetings, that they would, at most consider a quarter of a point increase, and then maybe take a pause and let the economy digest the moves that have been made. The moves that have been made and the own interest rate increases have historically been so rapid that it's not surprising that
Yeah.
they've shaken some accidents out of the system.